right. Well, hello, everybody. Let's get into our trading room for the last day of August. It's always funny when these Wednesdays fall on the last day. And a lot has been put on this day, if you guys have been following in the news, looking to get into, quote-unquote, one of the worst months of the year when it comes to the markets, September. I don't know. I'm not that type of guy. You could probably go back in time for the last 30 years and maybe that's true, maybe it's not, but then you get the quote-unquote October rally, right? Then we get the Santa Claus rally in December. Anyways, last day of August. Once again, I'm speaking opinion. So, take it for what you will. Take responsibility for the outcome. You guys get it. Let's jump into the recap. The markets look to continue their move lower from Friday pretty aggressively. Testing the 50-day moving average as of yesterday and even today. However, if this fails, we could confirm that overall bearish trend on the weekly chart. And Corey brought this to my attention a couple of weeks back. Then it seems like the rest of the world also took a look at it in the longer term, saying, wow, this rally over the last month or so is just a big bear rally from the weekly chart. And it looks to be coming to fruition, right? That's right. We are creatures of habit, folks. Can we cause our own problems? Of course we can. Sentiment, I'm going to say it's okay. So sentiment-wise, I said bullish, but maybe overconfident. That was from last week's class. We saw exactly what happened 2 days later on Friday, and so I went in and said, apparently, yes, it's bearish, and it's definitely reactionary. Powell comes out of Jackson saying, I don't know what you guys are talking about. We're keeping the throttle down, and the markets disliked it intently, and it did carry over into this week. So lower than expected ADP employment came out today. I need you guys to understand that because where I'm going to put focus on what's really going to, where we're really going to feel a slowdown, if there is one coming, the R word, is going to be in employment. And some of the numbers, Darren made light of this on Sunday's class. It was great. He goes, I did not want to be super doom and gloom. I don't want to put too many words in his mouth. But when you're seeing contraction in businesses, slowing down, laying employees off, slowing hiring, then you get this ADP employment number we're going to look at today, a lot less than expected. We were expecting contraction. It contracted a little further. So that's the spillover. That's the worry. Now what happens when people don't have jobs, they don't make money, and they don't spend? You guys get it. So the Fed is still hawkish. We'll go from there, and I'll get into the economic reports in a second. I went through the trades that we went through last week. A couple of them just didn't do well. We had some bull trades that just fell apart, and that's fine. That's why we wait for things to trigger. But there are a couple of bull trades that are hanging in there. These aren't anything that I want to go out and buy, and I'm super bullish on. But when you look at outperformance, it's nice to make note of it for that reason. It's outperforming. Okay, so I want to make sure that I put that down because if the markets bounce or consolidate or have a move higher, these should be the leaders. I've got a neutral trade out there on the XLV, the sector itself, but it's close to being a bear trade. We'll talk about that. And then I've got some bear trades. Johnson & Johnson has been on our list for quite a bit, and we've had some opportunities. And some of you guys that have been trading it, great work. If you're in it short now, great work because it's doing well, and it's got another setup that I'll talk about here in a second. So these are looking pretty decent. Let's jump into our first bull. Now, once again, this isn't anything that I want to go ahead and buy today, but what I do really like about it is that this candle gap down and has moved higher. I'm not sure what that is. I'm not sure if there's news on it. It is in a sector that usually can absorb this, right? Energy, oil, and gas. However, it hasn't been doing very well over the last week either. This has been a broad sell-off since Friday across the board. But this seems to be hanging in there. If you want to be super reserved, which I will be, because I'm kind of bearish. I just kind of like what's going on here. I'm going to have to see it get above at least that little shoulder there. If you want to maybe see a continuation of an ascending triangle pattern, it's a deeper pullback than I'd like to see. I'd like to see it consolidate maybe back around this line here at shoulder 34. It went a little deeper, that's fine. But if we can take the next few days and move higher, this might be something that I could stay bullish to sideways in. Now, it doesn't feel like the right market to be bullish, but once again, these are the outperformers. You got to write it down, say, hey, in light of what the markets are doing, where can I go to kind of hedge off a lot of my bearish exposure. Here, that's one of them. Here's another one. Gtlb came from this awesome class last week, and it's hanging in as well. It had an awesome bull pullback last week. It looked like nice confirmation, moving higher, and then, well, Friday happened. But this just didn't get slaughtered, did it? In fact, I can go all the way back to April, and we could still see this still have that nice support level. It's a little deeper, and yes, there's the argument that it did set a pivot low. Of course it did. But it seems like it wants to hang in there. So if this can actually stay above at 60, consolidate, maybe retest that 65, this is something that I'd be pretty interested in going into a diagonal call spread, things of that nature as well. All right, so that's about all I've got for the bull side, which, hey, finding two bulls from our class last week was pretty decent in light of what's happened on Friday and this week so far. Now, this is supposed to be a sideways play, and I'm going to go ahead and show you why it still made it, is because it is hanging on. And what makes a sideways play is being able to have the grit to, for you Bollinger Band guys, purchase it as it revisits these lower levels. Now, today's obviously not the day. Give it a little bit, see if it can't confirm and move higher. Corey made mention of something yesterday in his end of day, saying that we're probably due for a little bit of an oversold bounce or consolidation. I agree 100% with that, completely, especially where we're at on the moving average, daily moving average, the 50-day moving average. So, with that in light, you really don't want to give up on this if you are already sideways in it, to jump into it as a bullish bounce. That's bold. But if we do get that consolidation or move higher for the rest of this week, we've only got a couple of days left, you might want to think about playing something back in this range. And it's a wide range. It's up to here about the 134 area down to the 125 kind of a range here. So yeah, it might be something for what it is. It is at the bottom. Now, if you believe, hey, we're done, the bear's happening, it does have kind of this nice head and shoulders pattern. Look at this, guys. That it could break. And if it falls, okay, 120 to the bear side. So I was skeptical to put it on the sideways. That's still holding in there. But you could see that there is a bearish potential if it does indeed break. So let's go over to the bears. This is Roku. Been on our list for quite a bit. Folks, this thing, I believe, hit $500 a share about a year or so ago. So it's not doing well. And it's still moving lower. What I like about this is just the overall behavior of the stock. It just seems to set line after line and fall. Look at these levels here from the 110, and then it hits the 100 mark. It plays with it a few times, almost reaches it here at the beginning of July, end of July, it touches it. And here is this beautiful descending triangle pattern. I'll go ahead and just now draw this. Yeah, I've got a lot of lines today, folks. It's kind of fun. But we're at this nice move lower. What's really cool is pretty much the gap at the end of July. I love that it kind of retraced back up to its moving averages. It's got this arc. I would like to say this is cup and handle, but this handle's flat. It's not even really trying to retrace back up to the 20-day moving average. So this is more of a consolidation around the 70. And I imagine if this bleeds lower, 60 is definitely on the table. So I do like that sideways to down, even where it's at. Here's BX. This is another one that I pulled it up because I wanted to show the chart, because what I liked about that, I liked the crossover that it had. Well, the lines crossed mid-August, but it was because of this move here. These really caused that crossover. I thought that was pretty cool. I'm sorry, folks. I got that backwards. This move here had them cross back over. This move that we're seeing currently is sloping this 20-day, and we are already below the 50. Didn't want to get too many lines crossed there, but looks like I did. It might be early yet, but my main focus is going to be on the support here at 95. You can see back here in May, it was a pretty pivot, a decent pivot point. It touched it again end of July as it was trying to slope higher. But being below all those moving averages, nice volume on Friday to push it lower. Sideways to down, sure. If you want to be super patient, wait for it to really confirm below that 95. And a target of 90 just seems imminent. So I like it. I like that one. Okay, let's move on to Johnson & Johnson, another stock that has been on our bearish list and has done very well for a lot of our traders. Actually, I think Corey made mention of this yesterday as well. So it is very recent. Actually, this was on last Wednesday. Yep, I remember this stock. We were talking about it here. Hey, if this breaks the 166 mark, we got a projected target line. We could get to the 162, 160, whatever it was. And it did. Definitely confirmed on Friday. I do like the behavior that it's got over the last 3 days. Not even trying to revisit where it closed on Friday. Below that 164 level. So even if you don't want to play this the bear side anymore, folks, or you are in it, hold it and look to sell something against it. For anybody who's diagonalized this is doing really, really well. So I like it. It looks really good, and it still looks good. It's nice to see a little bit more consistency in some of the trades that we've had week to week to week. Now, there's a few trades, folks, that if you want to go through some of our bears that just aren't going anywhere, even with Johnson & Johnson, this thing's not falling off the table or hitting 160, 160, 155, so on and so forth. It's just kind of consolidating. So they're running out of steam directionally. Some of these beatdown stocks, you could still make money on them. A lot of my traders will say, well, geez, Joe, where's all the money coming out of? Well, it's coming out of the ones, the high flyers, the ones that are coming out and saying, hey, we're going to miss next week. We're not going to do so well. And I want you guys to keep an eye on some of those news headlines. Let's get to the market analysis. But that's going to be kind of the trend going forward. And when that happens, investors have to kind of react based on that information. So far this week, this is Monday, Tuesday, and Wednesday. Pretty easy to set precedents to the downside after that fall on Friday, but we're not really recovering. We're not getting a bounce. The knee-jerk reaction Monday morning, a bounce higher Tuesday. Even today, it's just consolidating. It's flat overall. We're down another 1.5% on the diamonds, the spiders, and the Qs. Just shy, just over. Yeah, I'm just kind of generalizing over there, folks. That about a 1.5%. The Russell's over 2%. Oil and gold, still not doing much. Oil was interesting to see. Energy is actually the strongest sector, but it's not racing up. So let's get to the charts. Here's the spiders, right at that pivotal level of the 50-day moving average. I don't have the weeklies, but you guys could bounce through them. You can see that it's absolutely confirmed that bear trend, and now it's at a pivotal point as well. Even if we move sideways from here or lower, it's not going to give us much to go on into the fall. There really is not much to go on until we get back up to the 410 level. I'll get my pin out because I'd rather draw here. Back up to this 410 level or even retest that 420. So you can see that we are already set one lower high through here. And we are definitely we're trying to set a lower low. We might not. We might roll over further and set a little bit lower. But we are definitely at a point to where we could be setting that. So at best, I'm thinking choppiness. Diamonds are the same thing. So is the Qs. We'll get to them in a second here. But it fell apart. This one's a little bit more aggressive to the downside. We'll see where we finish the day. But it had no problem slipping a little bit below that 50-day moving average. We got to look all the way back to, what is that, May? With this little hammer. I'll cut that out. Let's just do the bodies. Somewhere around there is its next support. It's pretty far. So we'll see how long that takes, or if it even gets there. Then the Qs. This is the weakest sector. I've got that coming up here in a second, but it's the weakest sector so far. The chart doesn't look too bad, but it did have a pretty good recovery. It's the most volatile sector, we know that. It also has its lower highs. About to set a lower low. That's if it's going to pivot. If not, it's going to roll lower. But I'm going all the way back into May here for support levels to the downside. And that's, even if it hits this, at best, we're chopping around. We've got to get back above that 20-day moving average or this 320 mark relative to the Qs here to get me back into sideways to bullish. Until then, I don't know how you're not anything but bearish. Right, folks? Economic news. Let's get into what's happened so far. Job openings upticked. Quits You guys, I don't know what quits are. We'll go there. home home prices. Let's go back up to the second one down here. You can see 18% down from 19.9% year over year. Well down from 20. I think we're just over 20 something percent from June of the previous year. That 19.9% is kind of smooth out over time. This ADP employment number here, guys, right down there. 268, expected a small uptick to 300, and we're well below that at 132. I truly think that number is going to be watched more and more often as we go forward. We know the Fed's going to keep the hammer down, but employment and unemployment numbers are going to be pretty big moving forward. Chicago manufacturing PMI in line. That number has been kind of hard to gauge. A lot of them have. In fact, if you remember last week, folks, I talked about economic numbers were all over the place. That's because of what's going on. We're trying to calculate what's happening versus what the markets are doing versus with the numbers. And sometimes it gets skewed. So what do we got left? Jobless claims. I'm going to be focusing on that. Hopefully you guys are. Non-farm payrolls on Friday. That's going to be a big one. And unemployment rate. I don't think the unemployment rate is going to change too quick. That might take 1 or 2 more weeks before we actually could see that increase or decrease. But initial jobless claims, continuing claims, non-farm payrolls, ADP, those numbers will be the front runners. If those continue to decline, well, then we know that the unemployment rate will probably follow suit. All right, so that's what we got for the rest of the week. Now, let's go ahead and pull the class. So we've been definitely on the pessimistic side for the last little bit. I agree completely with the boys here that that fall from Friday was pretty reactionary. It just shows a little skittishness, a little worry. That bull move was pretty cool. We actually saw some memes come back. It was interesting to see Bed Bath & Beyond shooting up and all that fun stuff. But it fell quick, and it was pretty fast to kind of recover back down to the downside. So there is some skittishness. There is some worry. Understand that when you put money into a stock longer term and that stock needs to contract or lay people off to make its numbers, that's not a good thing. It's not a good thing. So the markets, people say that the markets are usually ahead, and I agree with that when it comes to the investing, people trying to get ahead of it going up or down. But it is not a good gauge of what's going on economic-wise or how people feel day to day. All right, that's enough. We stalled out at 86%. I don't want to go too far on this one. We'll go ahead and close the poll. And I'm going to go ahead and share it. And there it is. 0 to -1. That's probably the best way to say it. Okay, 0 to -1. All right, guys, thank you so much. Let's hide that. Let's jump out to my market outlook. And as you guys could imagine, definitely -1 for the outlook. I debated 0, but I decided to go with a -1 on the weekly outlook. Now, what is it going on here? We are below the 20-day moving average, below the 50 MA. I put yellow because we're about to do it, and that 20-50 slope is also yellow because the 20 is definitely sloping lower, and I believe the 50 is sideways. Within the close of this day, both of those can go red. So I had to stay -1 on monthly and -1 on the weekly outlook. If they stay yellow, I would stay 0 on the weekly outlook. But as you can see, we're all pretty much on the same page. Definitely 0 to -1. So how are the sectors doing? Horrible. All of them. Every one of them. You can see that. Utilities at the strongest with only a 2% loss over the last 7 trading days. And technology there, let me zoom in on this. Technology down almost 5%. That could have changed over the last 20 minutes. I believe I took this screenshot about 30 minutes ago. But I don't think it's going to do much. So let's look at the strongest and the weakest. Utilities here. Just a pullback. Overall, though, it's still weak for the last few days. Let me get a line out. Because it is sitting right at a pretty key point that it's set basically end of May, early June. See if it's going to confirm or stay there. But it does also have its little hiccup here or a lower pivot because of Friday's action from that high it set here at 78. And it's below the 20-day moving average. If I was to err, sideways would be fine. But it's nothing that I really want to rush out and buy. I don't think there's anything out here that I want to buy at all, to tell you the truth. So the weakest, technology, and it's just because it's dipped below its levels. It's below its 50-day moving average, a little bit more weak, but it does have this little bouncing point here at 135 that it's set July, end of July, before it had a really good move to the upside with the rest of the markets. Interesting enough that this didn't even hold. It hasn't even been retested. So it's one of those things to where you got to figure out, what is going to come first. Are we going to see the oversold stuff bounce, or are we going to see a flight to strength, outperformance, and tech come later once people are more comfortable with the economy? I don't know. If I knew that question, we'd be millionaires. Let's do a conclusion, and then we'll run out and take a look at some trades. I've got shorter-term bullish level failed on Friday. Talked about, is the market overconfident on Wednesday? Friday said absolutely is. So can the 50-day MA hold today or yesterday or tomorrow? It held yesterday. Or could we be in for a sideways to a choppy market? We'll have to see. It's almost best at this point. Oh, I didn't even mention the VIX, but it's almost best at this point if we flush out as hard and fast as we possibly can. Get rid of it. Get rid of the fear. No matter what happens with the inflation number, the markets can recover. We won't, because companies are still coming in line. They're warning, but we're not seeing any bottom lines being hurt. Until we see that, the investor is going to still put money to work if there's money to be gained. So we're in this real ugly area of, well, until you can prove me that XYZ stock's not going to make their numbers, I'm going to keep buying it. On the other hand, until I lose my job, I'm going to keep spending money. So we're at this area of, we haven't felt it yet. Everybody's talking about the meteor that's coming, but we haven't even really seen it yet or felt it yet. I know that's an ominous way to look at it, but that's the best I can explain. So this could create some chop until something gives. Sentiment definitely shaky with bearish reactionary tendencies. That's been proven. If Friday wasn't enough, I don't know what will be. The Fed remains diligent on inflation, and I think that we should keep an eye on the unemployment and jobs numbers. Also, be mindful of companies that come out and are worried. I mean, we're not even close to earnings season. And we already have companies saying, oh, we got to retract a little bit. We might be cutting back in the future. Not sure if we're going to hit this number. So that talk really will add up, and we should pay attention to it. Okay, that's enough. Let's get to the markets. Where am I at here? Okay. And type in what you guys are looking at. So, first off, who was first? Let me go up to the top. Up, Neil's got Johnson & Johnson. Yes, okay, I'd like to see a trade on it. J&J. We've got a September 9th, September 30th. Okay, 2 week apart, weeklies, diagonal put spread, 165, 160. Let's take a look at it. All right, let me see if I can move it up, make it look clean before I start drawing my lines. 160, 165. Diagonal put spread. 2 weeks apart. Going September week 2, is that? Or, yeah. Wow, September week 1 is the 2nd. So there's 5 expiration cycles in September. So September week 2 and September week 5. Okay, Neil. Yep. Makes sense. Makes sense to me. Write this down. JJ. Let's. I wonder how long of a streak we can take with one stock. I think Johnson & Johnson's been on our class for 5 straight weeks. It'd be cool to have that same trade pop up over and over and see how many times we could trade it and make money on it. So, I don't know. If I had time, maybe I'd track it, but I think it's popped up a lot. Okay, Connor, TENB. Zoom in on this. Oh, very nice. Okay. Yeah, I like the action here. September 16th, 45.35 bear put. Since I'm here, I better get used to what expiration cycles are up. 2nd, 9th, 16th is the third Friday. So this is the third Friday. Regular expiration, 2.5 weeks away. It's crazy it's 2.5 weeks away, but we'll have 2 more weeks in September after that. Nuts. That means it's going to be what? A 4.5 weeks before October expires? Interesting. 45.35 bear put spread. In the money. $10. Nice and wide. Totally fine. I think that's great. Totally fine. I imagine this probably only has option or monthly expirations. But I like it. I like it. Could you diagonalize it? Sure. Could you target a butterfly? 45, 35, 30? Absolutely. I like it. TNB. Thank you, Connor. Okay, erase that. Let's move on to our next one. Dan's got NVAX. All right. Zoom in on this. Okay. Oh, I like that. Look at this spilling off today. Below 35. Looks like it's confirming. Yeah. Cool, Dan. Let's see. September 9th, 29.37. Bear call spread. 37 about. We'll cut it in half. 29. All right. Sure. Great. NVAX. And it's fallen. It could fall pretty quickly, which is, I imagine, that's what you're shooting for the September 9th, which is a week and a half from today. Awesome, Dan. Cool. Okay, what do we got next? DG. DG's got a butterfly. Here we go. 225, 230, 235. Let me see if I can draw that. All right, 225. Oh, I hit the wrong button there. 230. Okay, targeted. Okay, cool. 235, obviously about right there. September 9th, a week and a half. Looks like it'll test that 200-day moving average. Area. Like this area, probably. Well, I can see this. That's nice. Look at this. Draw that line all the way back here. For sure. Yep. I like it. That's definitely bearish, right? Targeted butterfly. Week and a half. Cool. Let's move to NVIDIA. NVDA. Wow, look at that just kind of roll over, right? Man, when they slip, find some support probably right around these areas. But let's see what Connor's got for us. We got another one here from him. It's September 16th, regular expiration October 21st, which I imagine would be regular expiration 140, 160, diagonal put. 160, 140. Plenty of time on this one for sure. I like it. Targeting the support there set early July. Shocker that we've got so many bears, and they're, you know, in the sectors they're in. No, that's good. All right. Let's do this. Moving on. Joel's got 4. All right. Zoom in a little. All right, so we got a kind of a symmetrical triangle pattern, but if it could break this floor down here, it could slip lower. 45 puts. It only has a monthly expiration to buy the put and sell it when it hits 38. Be patient with this. Yep, but yes, I can see that. So we got a symmetrical triangle pattern here, and it almost looks bullish. It does. However, if you wait for this floor to break, you have a descending triangle pattern, and then you've got targets you could set, in Joel's case at 38, back in May. So overall outlook on the market has to be bearish. Technology is a great sector to be bearish. This is still hanging in there, but when it rolls over, it could be an opportunity. So I agree with you there, Joe. FOUR on the bear side. Wait for confirmation. The last thing you want is a bounce, because this will, it looks like it's holding in there pretty good. But if it breaks, I agree with you, Joe. All right, GIS. General Mills has been on and off our watch list as an outperformer. Whoa, it's still holding in there. It's still pretty strong. September 16th, October 21st. This is regular expirations again. 77.5 calendar spread. Real quick, let me check this. Just want to make sure that I'm correct in October. Yes, October 21st is its regular expiration. So 27 or 77.50. That's a wide one, huh? Let's get the pen. 77.5. Sorry, calendar spread. Okay. Wanted to read that right. So you're expecting just consolidation right through here. What's cool about the calendar spread is it's got this really cool risk graph. So it looks kind of like a diagonal spread, but what's really cool about that, let's say it starts to go higher, it starts to climb up at this area, he can always buy back the extended leg, maybe the buy back the September if it goes too quick, and then guess what he's left with? That's right, folks. He's left with a straight call, which is really nice. So yeah, I think it's going to play sideways here for the next week and a half. Wait, September 16th. 2.5 weeks. All right. PPG is our next trade. This is the 127, 122 bear put spread. Okay. Pens out. 127, 122. Just about there. 127, about there. Okay. Yep. Bear put spread. Little patience. It looks like it's rolling over, though. Wait for this to get to 125 below before you pull that trigger. My 2 cents. But I like it, Joel. Let me put it down. PPG. Okay. Looking pretty decent so far, guys. Lots of bears, right? Not seeing any bulls, which is fine. You don't need any bulls in a bearish move. Okay, PAYX. Let's get in here, Dan. What do you got? He says, zoom in. It looks like it's free falling here. Looks like I broke the moving average, the targeted butterfly down to 120 or 115 levels, question mark, 125, 120, 115. Okay. Yeah. Now, Paychecks is great because it's just kind of free falling. I like when stocks do that. However, it's kind of in the same situation that the overall markets are. So it's best just to kind of hesitate. We got areas here where it's actually hit before. I know we're going pretty far back, but they are relevant. So this was a point at this area. It looks like it consolidated just above it here. So it's back to this 125 homeostasis. So the question is at 125, 120, 115. So targeting another $5 down. Sure. This makes me a little nervous because it looks like it kind of wants to peter out sideways. But it's definitely out of favor. So I'm actually okay with that. I'm personally 121, the 125, 120, 115. So I'll draw them all here, here, and here. If that just can bleed off and hit that area. What expiration cycle are you thinking about? I don't see that. Shorter term. So this could be that falling knife situation where a week, a half, 1 week, or half a week, where the next few days it gets closer to that, or do you want to play this longer term? Looks like he's saying September 16th, which that's all that Paychecks has, which is regular expiration. But at this point, you can actually take it if it hits it in 3 or 4 days. So targeted butterflies are nice for that. You've heard me say this 1,000 times. Let me get it on the watch list here as a bear, and we'll see what happens. But it's tough. Sometimes it's hard to chase these movers. I know a lot of traders, it's very hard to actually wait for something to confirm to the bear side before getting in bearish. But we have to. We have to do that. With paychecks, you could actually put something on with that target of 120. You could actually put on a 130, 125, 120 to see if it actually hits 120, comes right back, or consolidates. I'm fine either way. It just depends on your outlook on the overall markets. Cool. All right, guys. Not too bad today. Not too bad today. It's hard not to be super bearish because today is a bearish day. It's a bearish week that came from a bearish move yesterday. Oh, what am I doing here? I'm typing in trades that I started on the bull side, and guess what? We've got zero bulls. TNB. I want to make sure I'm getting these right. NVAX. But we do have some really good bears, so thanks for sharing, guys. Let me get these finished up. Let's see while I'm typing. You guys go back to the home screen there and take a look at where these markets are at. Completely consolidating. Makes sense. Makes sense. The reason being is there's really no reason to bounce. But the markets are going to hesitate at support levels. It was kind of obvious especially after the fall that we had Friday and so far this week. All right, let's see what we got. I think that's it. There are the trades for today, all on the bear side. So make sure you don't double up sectors. Make sure you don't have too many bears. If you take every single one of these and that's all you have, you better have some pretty good management skills or at least staggered expiration prices because I don't want you guys to be caught in consolidation or a bounce because we know that these will bounce and they'll bounce super hard. So just keep that in the back of your head. Thanks so much for your participation and joining me, guys. If you got any questions, you know how to get a hold of me. And hey, have a good one. Bye, everybody.